In the digital realm, beneath the surface of traditional media, lies a space where collective knowledge thrives, the information undercommons. Communities on Reddit have emerged as hubs of decentralized information, challenging the traditional dynamics of finance and investing. Let's take a deeper look at how individuals on Reddit have subverted traditional infrastructures and networks to create an information undercommons. Historically, there have been a few main channels that have existed for financial information to be disseminated among the general population. First, newspapers, magazines, and TV shows have covered financial markets and business for decades. Cornerstone papers like the Wall Street Journal and the New York Times have business sections. Magazines like Forbes, The Economist, and Barron's write in-depth articles on companies, individuals within them, and their investment insights. There are now several channels on television that are dedicated to covering financial markets. Think of Fox Business, CNBC, or Bloomberg. However, all of these traditional forms of media are owned by billionaires or capital interests. Logically, their interests align with their capital owners. The New York Times' three largest shareholders are Vanguard, BlackRock, and Farallon Capital Management. The Wall Street Journal and Fox Business are owned by Rupert Murdoch's Fox Corp. CNBC is owned by NBC Universal, a subsidiary of Comcast. Comcast is owned by Vanguard, BlackRock, and State Street, among others. Bloomberg is still private and owned by Michael Bloomberg, worth over $90 billion. It is in this landscape that a financial information undercommons has arisen. The internet is the great connector of people, and Reddit is one of the most popular places for enthusiasts of any topic to congregate and discuss. Financial communities like Our Fire and Our Investing gave simple, traditional financial advice to help average people achieve goals like buying a house or budget for the next month. On the other side of the coin was r/wallstreetbets. Wall Street Bets is a subreddit where traders share unconventional investment strategies, often focusing on high-risk, high-reward trades in stocks and options. The community is characterized by its off-color humor, memes, and a YOLO attitude towards risky bets. It gained mainstream attention during events like the GameStop short squeeze, where users collectively challenged Wall Street, causing significant market movements. After the 2021 squeeze, there was a significant overhaul in the moderation team of the subreddit, and discussion of GameStop was banned. The GameStop community then migrated to several other communities, including superstonk. These subreddits serve as virtual gathering spaces where retail investors come together to share insights, analysis, and strategy about GameStop, and a theorized mother of all short squeezes. Within the superstonk and Wall Street Bets communities, a network of information seekers and sharers thrives, analyzing data ranging from short interest and institutional ownership to company fundamentals. Users collaborate to uncover market trends and potential opportunities, challenging the hegemony of traditional financial institutions. Furthermore, alternative media sources are given a voice. While traditional talking heads like Jim Cramer will get posted, so too do people like Keith Gill, famous from the GameStop saga, and Dave Lauer, a former Wall Street trader who has dedicated himself to market reform. The most famous story from these forums surrounds GameStop. The saga began with Michael Burry, predictor of the 2008 housing market crash, sending a letter to GameStop's board in 2019, urging them to buy back shares and take advantage of his perceived undervaluation of the stock. His insight caught the attention of Keith Gill, known as the fucking value, on Reddit's Wall Street Bets. Gill began sharing his bullish thesis on GameStop, arguing the company was undervalued and poised for a turnaround. As Gill's posts gained traction on the subreddit, more retail investors started buying GameStop shares, including call options, betting the price would rise. Concurrently, hedge funds like Melvin Capital had heavily shorted GameStop, betting its price would fall. However, the combined buying pressure from retail investors, fueled by the enthusiasm on social media, began driving up the stock price. By January 2021, GameStop's stock price soared, reaching unprecedented levels. As it gained momentum, the short sellers faced immense pressure to cover their positions, leading to a cascade of buying known as a short squeeze. The situation reached a critical point when trading platforms like Robinhood restricted buying of GameStop shares, citing risk management concerns. This move triggered widespread outrage and accusations of market manipulation, leading to congressional hearings and renewed debates about market regulation. In conclusion, Reddit communities like superstonk and wallstreetbets represent the power of an information undercommons, a space where collective intelligence and education flourish. They showed that with just a few 100,000 people around the globe rowing in the same direction, you can make it all the way to a United States Congress hearing.